Hello traders, Gary Wagner here, about 10:15 in Honolulu, 4:15 in New York. On Friday, happy Aloha Friday as we say on the islands. It is the 17th day of April 2015 and this is the daily report for gold and silver, our weekend review, and what a week we've seen in the marketplace. Ending up on a mixed note in the precious metals markets with silver down, the rest of the complex up. Gold up moderately, up about $5-6 on the day, 580, 1204.04. That's our current print on the screen with a low of 1197.50 and a high of 1207.20. Silver, on the other hand, did not fare as well, actually closing lower on the day, off nominally, off about a nickel on the day, 16.25 when we take a look at that. We have had a low of 16.14 and a high of 16.49. We'll look at silver in a little bit. As I said, very, very interesting week, extremely interesting day in the markets. Of course, gold faring rather well, that in the light of some other markets, specifically the markets that I'm talking about, is the equities markets. Of course, that sell-off began in China, in Europe, overseas. All of these markets are obviously interconnected, and from that we saw the S&Ps basically giving away much, if not all of the gains. I believe it's almost all of the gains that we've seen in 2015. Start today's show by looking at a Standard & Poor's chart. This is a half-a-day chart, standard candlestick format. You can see the lows that came in right in here. You can see how the market closed off of the lows. I believe we're down some 350 points on the low of the day. The first part of the session, of course, as you can see when we look at it, staying in negative territory but not really selling off. But here we get a major sell-off in the market, running as low as maybe 62, 63, closing at 20.75. That's well off of the close that we saw on yesterday's trading activity when the market was sitting at around 2100, when we were looking at 2120 as our record highs in the market. Came really to this top. You can see we've now got basically a double top in the market with real resistance right at 2100. We've seen that market hit this point twice, only to sell off on the last time, come back up. On this particular round, where will it go? We'll have to look at it on Monday, but the real question traders must be asking, are they going to see this retracement in which we have the market not really bottoming out till it hits about, 2035, 2040 in that area, these bottoms here, which are just below the 23% retracement. And of course, the retracement that we're looking at, let's go ahead and blow this up, is a retracement from when the market really began to take off at about 1800 and runs to these record tops. And so traders, on that chart, of course, we're looking at a half-a-day chart. And on a half-a-day chart, it looks dramatic. It is dramatic. But when we take it into perspective, and this is the perspective that I'm talking about, the fact that back in 2011, the market's trading at what, roughly just below 1100, just above 1000. And if you put in these channel lines right in here, we have had this market moving pretty much to the upside. It has had a series of shallow retracements, and that's the key. As long as, in my opinion, of course, but as long as we stay within the confines of this lower support channel line, then this market is still headed higher. The real question will come is if we broke solidly below that. We haven't really had any kind of real correction in the market. Of course, we had this one in 2011. We had this major one, of course, when the market absolutely tanked and crashed. This is the 2008 housing crisis right in here, in which you see the market go from roughly just below 1600 to trade to a low just below 700. So a tremendous drop there. We've not seen any kinds of those drops. So with that in mind, we'll have to see, excuse me. But as I said, we are still within the confines or the channel of this upward track, which brings us, of course, to the US dollar. this week under tremendous pressure, really giving back a lot of the gains that it had seen as this market really meandered up to these highs, trading above 100, finding some real resistance just below 101. Daily chart, Friday, Thursday, Wednesday, Tuesday, Monday was the high that we hit. We talked about the fact that in terms of a candlestick pattern, what we had here was a three-river evening star. The following day, that is our confirming candle, red candle, lower low, lower high. And then these are what we call continuation candles. As long as we're getting red candles with lower lows and lower highs, we have a continuation pattern formed off what I call the flagship pattern, which is this three-river evening star. You can see coming back off of these lows, but nonetheless trading lower, which really brings us to how the dollar and gold really fared today. When we look at the big picture, both sides contributed to the net gains. A weakening dollar giving it $2.50. Normal trading adding almost $4. Gold, as we go into the close, currently up about $6 on the day. So traders, what does all of this information, how does that kind of fan out into the precious metals market, specifically gold and silver? The one thing that we can see on a fundamental basis is interest rate hikes are probably getting kicked down the road a little bit further than maybe anticipated at the beginning of the week. On a technical basis, we have real strong support here, 1192. We can see that for the better part or for the entire week itself, in terms of the bodies of these candles on a daily chart, they have remained above this price point, except for this low that was hit. Of course, this is when we identified a dark cloud cover. We did get our confirmation we were looking to see, but the MAC did not cross. And my daily traders, if you recall, from that day, it was the way that it bounced off of this that at first, the day before, we talked about the fact that if we got this confirming candle, we would probably initiate a short position. But when I saw the way that it bounced off of that, we nixed that. We basically put that to bed and stayed on the sidelines. What we're seeing now, though, is what I believe could potentially lead us into a second part of the rally. And this is really what I'm talking about. When we look at this market, we had this extreme rally, which takes us, call it 1140, up to 1223. From there, we get a retracement. That retracement is pretty much 50%. 50% mark is 1182, but it finds support. Trades back higher, but it runs into a double top here at 1223 and then begins to track lower, actually breaking through this particular price point at 1182 and testing these lows at 50%. So we now had a double bottom and a double top, but we have now remained above the next notch, so to speak, the 38% retracement level, which is 1182. So what that means is we have our low here and our high here. Those are our starting points. A higher low and a higher high, another higher low. And so my sense is that if we are in an upward track, we will now get a higher high. If we are going to remain in a sideways trading pattern, meaning a range-bound market, we've defined the parameters with 1182 on the low and 1121 to 23 on the high. It really needs to break above these tops before I would get bullish on this market. But my sense is, all things being equal in the way that we saw this market move over the week, we've got some real support in this area, and my sense is beginning of the week we will probably go and test at least this area up here to the 21 to 23 area. So as far as silver goes, to say that it's anything other than, I would call it almost a quagmire, something that really is not fitting within the pieces of the puzzle, is really what we're looking at silver, because I could say that silver moved in unison with the equities markets, with the equities markets down, the industrial component of silver really kind of fitting in within that. However, we had platinum and palladium, also heavily industrial metals. They fared to the upside today. So silver being the only precious metal that has traded lower, we can see without a doubt, we talked about this the other day, we did get the cross in silver. But since the time that we've gotten that cross, as you can see, the market has pretty much traded sideways. I've put some key levels that I'm looking at in the market. These are not based upon fib numbers as much as basic trend analysis, looking at tops and bottoms, historically speaking. And so we are well below what I looked at should be some sort of support. And in terms of major support, and we're looking at these bottoms right in here. And just prior to that, you have at around, call it this band of around 1560 to 1570. You've got these particular lows here. If the market continues under pressure next week, you want to look at this area here. And then if it does go through that area, we're looking at this area right here, just above 15. So these are the levels really right now that I'm looking at in terms of support. Resistance has got to be pegged right at the top here, just at around 1655. All in all, an interesting week in the market. We are remaining flat over the weekend with no open positions. We will look to see how this market trades come Monday morning. As I said, I believe we could see an uptick in gold. Silver, still questionable, but if we see a strong rally in gold, we could see silver turn around, but it is certainly not acting the way the rest of the precious metals group is. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.